Good morning, students. So, students, today we are going to discuss the first asset-based standard, which is Ind AS 16 property, plant and equipment. Students, this is the first standard on the asset side. And this standard is very important, right? Why? Because of multiple reasons. Reason number one, if there is a small shop, there is a small company, right? Or if it is a company like Reliance, in every balance sheet, you will find some fixed assets. You will find some property, plant and equipment, right? So number one, this standard deals with property, plant and equipment, and you will find property, plant and equipment in every balance sheet generally, be it a small setup or be it a multinational company or a large setup, right? Because if anyone who is doing any business, who is dealing into any commercial activity, so that entity must have at least some furniture. Okay, so that entity must have at least some furniture and fixtures, so it will come under property, plant and equipment, right? Number two, if you will look at any company's balance sheet, this item, property, plant and equipment, even as per schedule 3, this item comes as a first line item in the Ind AS balance sheet. Number three, if you will understand this standard properly, Ind AS 16 property, plant and equipment, 50% of the concept will get repeated in Ind AS 38 intangible assets. Okay. 50% of the concept will get repeated in Ind AS 40 investment property. Right. So if you understand Ind AS 16 properly, this will help you in understanding Ind AS 38, Ind AS 40, and other standards as well. So this standard has a role to play. This standard has an importance, right? And this standard will be used in other standards as well. Okay. Students, we will cover this standard in 2 classes, which is 6 hours completely. We will discuss theory. We'll take layman examples to understand the concept, right? So with the help of layman example, we will understand the concept, and then we will also do some illustration to practice the concept, right? Friends, in our accounting standard days in CA Inter, which standards were talking about property, plant and equipment? Can you tell me? What is the standard number and what is the name of the standard in accounting standard? Anyone who wants to try? Rahul is saying AS10. You are right, Rahul, but what is the title of that standard? He's saying accounting for fixed assets. Answer is no. So accounting for fixed assets was the old name, right? So as of now, if I talk about accounting standard on fixed assets, it is not accounting for fixed assets. Now the name of accounting standard for fixed asset has been changed. Now it become what? Now it become property, plant and equipment. So accounting standard, maybe the name is property, plant and equipment. The name is property, plant and equipment. Okay. It is property, plant and equipment. So friends, if I talk about accounting standard, AS, accounting standard. AS. In AS, the standard is AS10. And the title of AS10 is property, plant and equipment. In March 2016, 30th March 2016, AS10 got amended. Okay. And the revised name of AS10 was property, plant and equipment. It is property, plant and equipment. Prior to 30th March 2016, the name was accounting for fixed assets. Okay. And friends, what is the standard on depreciation? What is the standard on depreciation in AS? AS में depreciation पे कौन सा standard है? Friends, accounting standard 6 was up to 30th March 2016. Now there is no separate standard on depreciation. Why? Because under Ind AS, there is only a single standard. which deals with PP, which deals with the depreciation, everything. So likewise, in accounting standard, AS6, accounting standard 6 was the old standard, which got deleted on 30th March 2016. So as of now, there is only a single standard, AS10, property, plant and equipment. Okay. Under Ind AS, we are going to read this Ind AS 16. The title is property, plant and equipment. This accounting standard, the government has aligned this accounting standard with Ind AS 16, right? So the government has picked up, in the first set, the government has picked up this accounting standard 10 to align with Ind AS 16, and they have largely aligned AS 10 with Ind AS 16. Why? Because every company has some fixed asset, every company has some property, plant and equipment. In IFRS, friends, in IFRS, globally, there is IAS 16, International Accounting Standard 16, and the title is Property, Plant and Equipment. This is standard overview. This is standards in various gaps. Okay. Now let's talk about Ind AS 16, Property, Plant and Equipment. Ind AS 16, property, plant and equipment. I can see a lot of students have joined. So good morning, Stephen. Good morning, Dhanya. Good morning, Abrikesh, Tushar, Karthik, Mamta, Niranjan, Nisha, Jini, Pooja, Samir, Usha, Vignesh. So good morning, everyone who joined on the Zoom link, and a few students are there who joined on YouTube. So good morning, Khushi, Hemant. Good morning, Rahul. Good morning, Rajat. So good morning, everyone. Yes. So we understood now in India, if I talk about AS, it is AS 10. If I talk about Ind AS, it is Ind AS 16. If I talk about globally, it is Ind AS, sorry, IAS 16. Correct? Correct. Students, are you able to write on the chat box? Are you able to write on the chat box?
No, sir.
No, sir. Good morning. No, sir.
अशोक जी, आप चैट बॉक्स में लिखने का राइट दे दीजिए स्टूडेंट्स को. अशोक जी. ओके ओके.
सर राइटिंग ऑप्शन हमने बंद कर दिया है चैट पे. किसी
सॉरी.
को भी राइटिंग करनी है तो सर वो पोर्टल से कर सकता है.
अच्छा, वो पोर्टल पे है.
हाँ.
ओके ओके.
जूम
बट
पे कोई भी सर चैटिंग नहीं हो पाएगी.
नहीं, 1-to-1 पे जैसे पहले था
नहीं
लास्ट.
सर, नहीं सर, कोई सी भी राइटिंग हमने बंद कर दी है.
अच्छा
यस
अच्छा.
सर.
अंडरस्टूड अंडरस्टूड. ओके. So now if student has to interact, they have to write on the portal. Right? So I am accessing the portal also. Okay. Fair. So talking about the agenda, friends, in this particular standard, we will discuss when an item is required to be recognized as property, plant and equipment. For example, if a company has purchased a machinery, whether that machinery has to be recognized as a property, plant and equipment or not. Okay. So the first thing is recognition, whether that machinery is required to be capitalized or that machinery is required to be charged off to the P&L. So the first thing comes out as a recognition. Friends, there are 4 pillars of accounting. There are 4 pillars of accounting. What are those 4 pillars of accounting? Recognition, measurement, presentation, disclosure. Okay, recognition, measurement, presentation, disclosure. How that item is going to be recognized in the books of accounts. When to recognize. Okay. So we will be talking about recognition of initial expenditure and subsequent expenditure as a property, plant and equipment. Okay. Then we will be talking about the measurement at recognition. Okay. Measurement at recognition, which is element of cost and measurement of cost. Then the third one is measurement after recognition. Right. So friends, whenever we are talking about measurement, there are 2 kinds of measurement: initial measurement, subsequent measurement. For example, today is 8th October 2024. I purchased a car today, right? So what is my initial measurement of the car? Initial measurement date is transaction date, today. Initial measurement date is a transaction date. Today is the initial measurement date, right? 8th October. I will close my books of accounts on 31st March. 31st March 25. 31st March 25 is my reporting date. So on 31st March 25, I will compute depreciation. I will look at the impairment losses. So I will compute the carrying value. That is my subsequent measurement. Okay. So initial measurement on the transaction date, subsequent measurement on the reporting date. So we will be discussing in this standard measurement after recognition. So we will be talking about cost model, revaluation model. You guys are already aware about cost model, revaluation model, because it was there in AS10 also. Then we will be discussing depreciation. What is my depreciable amount? What are the depreciation method like SLM, WDV, unit of production method? We will be touching impairment also, and how to treat when there is a compensation for impairment, right? So after recognition measurement, we will be discussing when an item will be derecognized, disposed of, right? For example, the company has purchased a machinery. Now the company has sold the machinery. Of course, machinery needs to be derecognized. Then what are the sort of disclosures, right? Which is required in the notes to accounts for property, plant and equipment. Students, I will show you one of the disclosure, right, during the session, but the disclosures are not important from the examination perspective. Okay. So we'll be talking about recognition, measurement, initial measurement, subsequent measurement, depreciation, and derecognition in this standard for the next 2 days. Objective, every standard has been drafted with some objective, right? So what could be the objective of Ind AS 16? What could be the objective of Ind AS 16? The objective of Ind AS 16 is to prescribe the accounting treatment for property, plant and equipment. Okay. So this standard talks about the accounting treatment of property, plant and equipment. Okay. Accounting treatment for property, plant and equipment means how to recognize, how to measure, how to depreciate, how to compute the carrying value. So this standard talks about the entire accounting. It also talks about the recognition of the assets, determination of carrying amount, okay? Recognition of the assets. When an item has to be recognized as an asset, determination of carrying value, okay? Depreciation charges and impairment losses. These aspects we are going to discuss in this standard. And this standard provides the accounting treatment of PP, provide the recognition of PP, how to determine the carrying value of PP, how to compute the depreciation, and when to impair PP. So this is the objective of this standard. Talking about the scope on which item Ind AS 16 is applicable, Ind AS 16 is applicable to all kind of property, plant and equipment. Property, plant and equipment, all kind of property, plant and equipment, except if a property, plant and equipment is classified as held for sale. Students, you will read Ind AS 105. Okay. So Ind AS 105 talks about a non-current asset held for sale. Generally, PP is a non-current asset. Property, plant and equipment is a non-current asset. Okay. If a non-current asset satisfies the criteria for held for sale, in Ind AS 105, there is a criteria given. Then when an asset will be classified as held for sale, if that PP will be classified as held for sale, in that case, it will not come under Ind AS 16. It will be accounted for as per Ind AS 105. Then Ind AS 41, friends, we will read Ind AS 41 also. In Ind AS 41, it's an agriculture related standard. Okay. Biological asset related standard. While biological asset is a non-current asset, livestock is a non-current asset. It is not a PP. It has to be accounted for as per Ind AS 41. Okay. In our accounting standard, we do not have any counterpart standard of Ind AS 41. Right? हमारे पास कोई biological asset का standard नहीं था. But in Ind AS, we have Ind AS 41. Recognition and measurement of exploration and evaluation assets. Hindalco, Adani, Reliance. Okay. So these Vedanta, these companies are into the business of mining also. They are extracting iron, ores, minerals from mines, right? So in that case, if there is an exploration and evaluation assets, okay, the mining ores, that is accounted for as an Ind AS 106, not as per Ind AS 16. Mineral rights, mineral reserves. For example, Reliance got a gas block, or ONGC got a oil block, oil well. So mineral rights, mineral reserves such as oil, natural gas, and similar non-regenerative resources are not comes under Ind AS 16. But this standard will be applicable to PPE, which are used to develop or maintain those assets, right? So in mining business, you must see there are cranes, there are trucks, there are a lot of machineries, okay? There is a lift in which the laborers are going into the mines, okay? So those assets which are used in these mining business, mining activity is classified as property, plant and equipment. So students, we discussed objective, we discussed scope, not much relevant from the examination perspective. Now the most important part, we have arrived at most important part. Definition of PPE. Sir, what is a property, plant and equipment? That, as the name suggests, property means land and building. Plant means factory. Equipment could be anything. Equipment could be vehicle. Equipment could be aircraft. Equipment could be ship. Equipment could be furniture and fixture. Office equipment. Laptop. Anything. Okay. Computer. So what is a PPE? So now we are starting the actual journey from the examination perspective. Now we are starting the actual standard. What is PPE? PPE is a tangible item. I have a mobile. This mobile is a PPE. Sir, have you concluded that this mobile is PPE? One leg. There are three legs of this definition. One leg I have met. This is a tangible item because I can touch, I can hold, I can see. I can touch this. So mobile is a tangible item. So what is a PPE? PPE is a tangible item, which are held for. Held for what? Which are held for. So PP is a tangible item, and that tangible item is held for three purposes. Either of the three purposes. Held for use in production. Held for use in production or supply of goods and services. Held for rental purposes. Held for administrative purposes. X Limited is having a machinery. X Limited is having a machinery. Okay. What is the purpose of that machinery in the business? What is the purpose of that machinery? What is the purpose of this machinery?
Production of goods, sir.
Production of goods. The purpose of the machinery is production of goods. Okay, very good. So that machinery is held for use in the production of goods or services. In the production of goods. So A Limited is producing some goods, and A Limited has a network all across India. So A Limited has also purchased some trucks for delivering the goods from its factory to the various locations in India. What is the purpose of these trucks? Supply of goods. Supply of goods, right? These trucks are used for, these trucks are held for use in the transportation of goods, in the supply of goods. Okay. And this company has some assets. This company has some machineries which this company has used for rental purposes, right? Have you seen any construction site? You must have seen the construction site is having a lot of machineries, like that crane, like that mixer machine, which is mixing the material for the purpose of construction. Generally, what happens? These construction sites are using the machineries like crane, and they are getting this crane on a rental basis. It means the crane company provides these machines to the real estate companies on a rental basis, right? So there is a crane company which has purchased the machinery, and these machineries are held for use in providing for on the rental basis. मतलब ये कंपनी क्या करती है, अपनी मशीनरीज रेंट पे देती है, राइट? अपनी मशीनरीज रेंट पे देती है. So what is that? That is held for use in rental purposes. Okay. The company is having chair and table. The company is having, furniture and fixtures, coffee and tea vending machines. Okay. Water purifier, air condition. What is the purpose of these assets? These assets are held for use in administrative purposes. These assets are held for use for administrative purposes. Okay. So PP is a tangible item which is held for use in production or supply of goods and services, held for rental purposes and held for administrative purposes, and which is expected to be used during more than one period. Which is expected to be used during more than one period, right? और जिसका use expected है more than one period, more than one accounting period, generally more than 1 year. Okay. So now let me take an example and explain you these 3 legs put together. A Limited has purchased a machinery. Check the 3 legs. Leg number 1. Whether machinery is a tangible item? Answer is yes. Whether machine is held for use in production of goods? Answer is yes. Okay. So either it has to be held for use in production or supply of goods and services or for rental purposes or for administrative purposes. Yes, that machine is held for use in production purposes. Whether machine is expected to be used for more than one period, I mean to say whether the life of the machinery is for more than 1 year. Answer is yes. The life of the machinery is for more than 1 year. For more than 1 year, right? For example, the company has purchased a small machine, and that small machine can be used only for one time production, only for producing goods for one time. Okay. So after that, that machine will be scrapped. बहुत सारी मशीन या बहुत सारी आइटम्स होती है ना जिसका आप सिर्फ वन टाइम यूज कर सकते हो. Yes. So this machine can be only used for one time production. Okay. And that production took around 2 days. Okay. Whether that machine is a tangible item, answer is yes. Whether it is held for use in production, answer is yes. Whether this machine is expected to be used for more than 1 year, more than one accounting year, one accounting period, answer is no. Whether that machine will be classified as a PP, answer is no. That machine has to be expensed off. Okay, because that is not a PPE, that is not a property, plant and equipment. Have you understood? So you have to meet those 3 conditions. It has to be tangible item, it has to be held for use in production or supply of goods and services or for rental purposes or for administrative purposes, and it is expected to be used during more than one period, more than 1 year, right? It has to be classified as PPE. In that case, it has to be classified as PPE, right? Students, I would request all of you, please use the portal, for responding. Yes, no, your queries, right?
सर पोर्टल को कैसे एक्सेस करना है क्वेरी लिखने के लिए?
अजीत जी एक बार आप हेल्प करेंगे प्लीज, एंड इफ पॉसिबल आप आज के लिए राइट्स दे दीजिए स्टूडेंट्स को डायरेक्ट मैसेज का.
Good morning, sir. Abrakesh.
Yes, Abhikesh.
Sir, actually, yesterday it has been told to us that now there is 2 way to access, interact. One is through portal and one is through directly through this audio mic.
Okay.
So our mic will be unmute for, till the class last. So we can just speak and unmute ourselves and can interact with you.
Actually, what happened? So, see, Abhikesh, so I would suggest do not unmute your mic only for saying yes or no. Okay, because otherwise what will happen? So after 5 days or let's say after 1 month, when you again listen this video, this lecture, so probably there will be a lot of disturbance, right? For example, I am asking whether this machine is used for production. So all 17, 18 participants will unmute and say yes, sir, no, sir, yes, sir, no, sir. You understand? So that audio has to be used for constructive purposes.
Yes,
for example, I'm asking a question. Okay?
Understood.
Right. So क्या होता है, बहुत बार हम इंटरेक्ट करने के लिए फैकल्टी इज द ओनली पर्पस, बट फॉर एवरीथिंग इफ ऑल ऑफ यू अनम्यूट एंड से यस सर, नो सर, प्रोबेबली
But
देयर इज
got it, sir. Yes,
Yeah.
sir. I agree. Thank you.
Yeah. So we understood that property, plant and equipment is a tangible item which is held for use in production or supply of goods and services, held for rental purposes or administrative purposes and expected to be used for more than 1 year. It is classified as a property, plant and equipment. Students, now I have an example. Let's say a company has purchased a building and company has leased out that building for the purpose of earning rentals. Whether that building is a PP, it is a tangible item, the life of the building is more than 1 year. This building is held for the purpose of earning rental. Is it a PP?
Yes, sir.
Yes. Rajat has written yes, sir. Let me look at the other participants also. Yes, Pradeep is saying yes. Okay, Ginny is saying yes. Yeah.
Sir, I am unable to write through the chat box, please.
So students, there is an exception, right? Standard says that if a property is held for rental purposes, it is not a PP. It will come under Ind AS 40 investment property. It will come under Ind AS 40 investment property, right? So there is an exception. You can see it is written that exception, land and building held for rental purpose is covered under Ind AS 40 investment property. So after completing Ind AS 16 and Ind AS 38, the third standard which I will be taking is Ind AS 40. Ind AS 40 is a standard which covers investment property. And what is investment property? Investment property is a land and building, land or building, which is held for earning rental purposes. तो लैंड एंड बिल्डिंग के लिए अलग से स्टैंडर्ड है. दैट इज वाई लैंड एंड बिल्डिंग इफ हेल्ड फॉर रेंटल पर्पसेस इज आउटसाइड द स्कोप ऑफ Ind AS 16. लैंड एंड बिल्डिंग इफ हेल्ड फॉर रेंटल पर्पसेस is outside the scope of Ind AS 16 because it is covered under Ind AS 40. So Ind AS 40 covers those land and building which is held for earning rentals or for the capital appreciation purposes. Okay. तो अगर आपने लैंड और बिल्डिंग या तो आपने रेंटल अर्न करने के लिए रखा है, खरीदा है, या फिर आपने कैपिटल एप्रिसिएशन के पर्पज से खरीदा है, यू हैव परचेज्ड अ प्लॉट ऑफ लैंड एंड you have just kept it idle. Why? Because you are thinking that after 5 years, my money got doubled and then I'll sell the plot. Okay. So it is held for capital appreciation purposes. It will be covered under Ind AS 40, not Ind AS 16. This is an exception. Okay. Sir, if the company has purchased the building for the purpose of using in the business, the company has installed a factory in that building, or the company is using that building for the purpose of corporate office, for the purpose of running business. Now, whether this building is a PP or this building is not a PP, this building is a tangible item. This building is held for use in production if it is a factory, or supply of goods, example for if it is godown, or for administrative purposes if it is a corporate office, right? And building is more than 1 year and hence it is a PPE. Okay. So if a building is used in the business purposes, it is a PPE. If building is held for earning rental, it is an investment property covered under Ind AS 40. Is that clear? Now let's discuss few examples to understand the definition of Ind AS 16 to understand the definition of PPE. XYZ Limited has acquired a land to construct a plant for manufacturing of goods. Also acquired below item for the business. Machine A for production. Building for rental purposes. Truck for transportation of goods. Furniture and fixture for office administration. Laptop for the employees for working in the office. SAP software for maintaining records and books of accounts. Identify whether above items are PP or not. Tell me. Land. Tell me. First of all, XYZ Limited has acquired a land to construct a plant for manufacturing of goods. Whether this land is a PP or not a PP. Whether this land is a tangible item, answer is yes. Whether it is held for production, yes. On the land, plant will be constructed. So it is held for the purpose of installing a factory. Whether the life of the land is more than 1 year, answer is yes. Whether this land is a PP or not a PP, this land is a PP. Okay, this land is a PP. Yes. So many students have responded on the portal. Yes, this land is a PP. Machine A for production. This machine is also kept for production. Tangible item held for production and life is more than 1 year. Yes, machine A is also PP. Truck for transportation of goods, whether it is a PP, tangible item held for supply of goods. Okay, and life is more than 1 year, it is a PP. Furniture and fixture for office administration, tangible item held for administrative purposes, life is more than 1 year for the furniture, it is a PP. Okay. Laptop for the employees for office working, laptop is a tangible item. I am using my laptop. Okay, is a tangible item. It is held for the purpose of administrative purposes. Okay, for using into the business, for maintaining the data, for maintaining the books of accounts, and the life is also more than 1 year. It is a PP. SAP software for maintaining records and books of accounts. SAP software is a tangible item. SAP software is a tangible item. Answer is no, it is an intangible item. You cannot touch SAP software, right? It is not a physical asset. SAP software is an intangible asset. So it is not meeting the first leg of the definition. It is an intangible item and hence it is not a PPE. It is an intangible asset. Okay. Clear? So this is what it is there. Building for rental purposes. Sorry, I think we have skipped this building. Building for rental purposes, investment property. Okay. Okay. So these are the answer of these items. Clear? Is that clear? So many students have responded the right answer for every item. Students, now we understood the definition of property, plant and equipment. We understood there is an exception. If a building or land is held for rental purposes, then it will not come under the definition of PPE. It will be an investment property, right? Only land or building, Friends, in today's world, you guys are doing an article shape. You are visiting to various companies. Okay. You are visiting to various companies. You must have seen the printer. Have you seen the printers? So generally what happens nowadays, the companies are not purchasing these printers. The companies are getting the printers on a rental basis, right? So if the company is getting the printer on a rental basis, there are some companies who are leasing the printers, who are providing the printers on the rental basis. So those companies, for example, HP, if HP has manufactured or purchased the printer for the purpose of giving it on a rental basis, so these printers are like a machineries. Okay. So these printers are not land and building. So these printers are property, plant and equipment for HP. These printers are not investment property. Why? Because in investment property, it is a property. So property क्या होती है? Property land या building. Okay. So investment property का मतलब होता है land या building. Okay. Understood? Understood? So if a machinery is given on a rental basis, if machinery is held for use for the purpose of earning rental, it is a PPE. It is not an investment property, it is a PPE. But if a building is held for use for the purpose of earning rental, it is your investment property, not a PPE. Okay. Recognition criteria. Okay. An item will be recognized as a PPE when it is probable that future economic benefit will be received and cost can be measured reliably. If two conditions will be satisfied. F, future economic benefit. C, cost can be measured reliably. FC, fixed cost. FC, F stands for future economic benefit. C stands for cost can be measured reliably. If these two conditions will be satisfied, then that item has to be recognized as PPE. So let's understand with the help of few examples. A company has purchased a machinery. Okay, a company has purchased a machinery from New Delhi. So there is a company in Gujarat. This company has purchased a machinery from Delhi. So whether future economic benefit is expected out of that machinery? Yes, the company will produce the goods and the company will get the economic benefit. Yes, future economic benefit is expected. Whether cost can be measured reliably? Answer is yes. Since the company has purchased the machinery, the company has an invoice, the company has paid the consideration. Yes, cost is known. So normally this cost will be measured reliably, right? So normally in practical world, these two conditions will always be satisfied if you are purchasing some asset, right? Cost भी पता होगी और आपका future economic benefit आएगा तभी तो asset खरीदा है आपने, okay? So in this case, this item, this machinery has to be recognized as a PPE, property, plant and equipment. Okay. Of course, the definition has to meet. If you have purchased a SAP software, future economic benefit is probable. Answer is yes. Cost can be measured reliably. Answer is yes. Is it a PPE? Answer is no. Why? It is not meeting the definition of PPE. Recognition तो हो गया. Recognition तो ठीक है आपको balance. Second example, the company has purchased a machinery from China for rupees 1 crore. I am telling you for rupees 1 crore. So cost can be measured reliably. Cost to pata hi hai na? Cost. You are aware about the cost. The moment the machine was delivered to the factory in India, the Indian government has announced that the kind of the product which is manufactured from that machinery is banned, right? Is banned. And even though you cannot sold this kind of machinery outside India, okay, गवर्नमेंट ने बैन कर दिया कि वो जो चाइना से आपने मशीनरी मंगाई है आप उससे प्रोडक्शन नहीं कर सकते, मतलब वो प्रोडक्शन बैन कर दिया गवर्नमेंट ने, ओके, और आप उस मशीनरी को आउटसाइड भी बेच नहीं सकते. While you are aware about the cost, but whether future economic benefit is expected from this machinery, whether it is probable that future economic benefit will be received, is it probable that future economic benefit will be received? Yes. Yes. Answer is no. Answer is no. Future economic benefit is not expected. फ्यूचर इकोनॉमिक बेनिफिट कहां से आती है उस मशीनरी से? फ्यूचर इकोनॉमिक बेनिफिट आती प्रोडक्शन करके. But now, since the government has banned the production from that machinery, that output has already banned, that product has already banned. So company will not be able to receive any money, any consideration, any future economic benefit. So in this case, the cost of the machinery is rupees 1 crore and the government has banned, and hence there is no future economic benefit. Whether this item will be capitalized as a PPE? Answer is no. Why? Because it is not meeting the recognition criteria. Which recognition criteria? Future economic benefit criteria. Is that clear? Is that clear? So friends, there must be a future economic benefit and the cost is known. Okay. अगर cost नहीं पता होगी तो accounting कैसे करोगे? How will you do the accounting if the cost is not aware? Okay. So these are the two conditions, just for your purpose, just for your memory. Not in examination, the examiner will not ask the question that what are the recognition criteria of PP, but you need to be aware that yes, future economic benefit should be there. That is why you are capitalizing the asset. And it is the basic definition of asset. Asset is a resource controlled by the entity which provides the future economic benefit, right? And cost should be known. So far, we understood the definition of an asset, which is PP, property, plant, and equipment. We have understood the recognition criteria of PP, right? Now, what is the treatment of spare parts and standby equipment and servicing equipment? Okay. So students, when you bought a car, have you got a fifth tire? So how many tires are there in the car to run the car? How many tires are there in the car to run the car? There are 4 tires. कार में तो 4 ही टायर होते हैं ना, there are 4 tires which is used for running the car. But when you are buying the car, you are getting the 5th tire also, which is known as a Stepney. This tire will be used when either of the 4 tire will got punctured, right? Then this Stepney has to be used. So this Stepney, this 5th tire is like a spare part. This is like a spare part. Okay. So if a company has purchased a car, that is a PP, property, plant and equipment. But if the company has purchased a spare parts with that car, अगर कंपनी ने वो स्पेयर पार्ट खरीदा है तो वो स्पेयर पार्ट क्या होगा? सो लाइकवाइज many companies are purchasing the machineries. Okay, there are big machineries, and with those machineries there are some spare parts which the companies are purchasing, and those spare parts will be used when the machine will get breakdown. Okay, जब मशीन खराब होगी, breakdown होगा, that spare part needs to be installed and the damaged part needs to be deinstalled. Like your main tire which has got punctured, you just remove that tire, you put the Stepney tire and you remove that main tire into the dicky of the car. Okay, friends, now the standard talks about what is the accounting for spare parts. So Ind AS 16 says that a spare part will also be treated as a property, plant and equipment if it meets the definition of PPE. If it is a tangible item, if it is held for use in production, supply or goods or services, held for rental purposes, administrative purposes. कार का जो यूज है टायर का भी वो यूज होगा, because the tire has to be installed in that car. जो मशीन का यूज है स्पेयर पार्ट का भी यूज होगा, because that spare part will help the machine to run. Okay, so and if the life of the spare part is more than 1 year, for example, that Stepney tire, what is the life of that Stepney tire? Generally the tire runs for 40,000 50,000 kilometers. You know that, you know this fact. Generally the life of the tire is 40,000 50,000 kilometers, and 40,000 50,000 kilometers technically means 4 to 5 years. 4 to 5 years. Okay, 4 to 5 years. It means the Stepney tire has a life of more than 1 year, so it is also considered, it is also accounted as a PPE. Okay, so spare parts, standby equipment, servicing equipment. What could be the standby equipment? For example, fire extinguisher. Have you seen in the theaters there is a fire extinguisher? In the companies, factories, theaters, there is a red cylinder type of machine which is known as a fire extinguisher. Okay, so what is that fire extinguisher? This is like a standby equipment which is used only when some emergency will be there, only when in some abnormal situation. So what is that spare part? What is that standby equipment? This is also considered, this is also known as a property, plant and equipment. This is also known as a property, plant and equipment. Sir, if the life of that spare part in the machinery in factory, in the machineries, there are spare part which requires replacement on a regular basis. Every week, there is a spare part which requires replacement every week. So that spare part will be accounted for as an inventory under Ind AS 2. Okay. Otherwise, if it meet the definition of PP, if it meet the recognition criteria of PP, it will be Ind AS 16. So this is one clarification which is given in this standard, right? Is that clear? Is that clear, friends? Subsequent costs. What is subsequent cost? Friends, let me go to the Excel file. Ind AS 16, property, plant and equipment. Okay. So we read the definition of PP. Definition of PP. What is my definition of PP? PP is a tangible item. Tangible items which is held for what? Which is held for? Held for use held for use in what? Number one, held for use, production of goods or production of goods or supply of goods and services, supply of goods and services or supply of goods and services or rental purposes or administrative purposes plus the life is used for more than one period. This is the definition of PP. What is the exception? Land or building held for rental purposes is not a PP, it will be accounted as an investment property. Ind AS 40. Okay. So definition of PP we discussed. Recognition of PP. Recognition of PP. So when PP is recognized, when two conditions will be satisfied, future economic benefit is probable plus cost can be measured. Okay. So generally cost pata hi hoti hai, cost is measured, right? If these two conditions will be satisfied, it is a PP. It has to be recognized as a PP. Okay. Is that clear? Spare parts, standby equipment and servicing equipment this will be accounted as a PP if it meets the definition and recognition criteria of PP, right? Of PP. Okay. If not, it will be accounted as an inventory under Ind AS 2. Okay. So we talked about spare parts, standby and servicing equipment. Correct? Students, any problem, any doubt so far? Right? Any doubt so far?
Yes, sir, Brikesh.
Yeah, Brikesh.
Sir, in case of, I mean, that second slide where whether it is PP or inventory under Ind AS 2, there it has been mentioned that if the criteria of recognition under AS Ind AS 11 met, then it is a PP, otherwise inventory. Now, sir, what is what other than RMPM and so everything falls under Ind AS 16 only, sir.
So Abrikesh, that's why I have told you that first you need to see the recognition criteria, then it has to meet the definition of PP also, right? Now, what is the definition of PP? As you have rightly mentioned, that everything for which cost is known and which is, future economic benefit is there, it has to be PP. But the definition talks about that tangible item. Yes, that will be a tangible item. Held for use in production. Yes. And it has to be used for more than one period, more than 1 year, right? So in factories, there are so many machineries which have so many spare parts, right? Like loose tools, jigs, dies, okay? So many small spare parts which require to be replaced at a regular interval. Regular interval, say 1 month, 1 week, 6 months, 2 months, right? So these kind of consumables, these kind of spare parts, small items are classified as an inventory because it has a life of less than 1 year. It has a life of less than 1 year, correct?
Okay.
Is that
Okay.
clear?
Yes, sir. So nut bolts are inventory generally.
Yes, nut bolts are inventory. Those grease oil, lubricants, these are inventories. These are not PPE. Okay.
I agree. Yes, sir.
Okay.
Okay.
Right?
Thank you.
Okay. Good. Yes. So now let's discuss the one of the most important part under this standard, which is subsequent cost. We all understand that when we go to acquire a PP or construct a PP, right? In that case, it will be a PP. So I went to the showroom and I bought a car. What is that? That is a PP, because the car recognition criteria is meeting and the definition is also meeting. It is a PP. The company went to the factory and buy a crane. Company Jaguar के पास गई, company crane खरीदा company ने. So that crane is a PP. But what is the subsequent cost? The company bought the truck. Okay. So that truck is a PP. So in many cases, there are some subsequent cost also. There are some subsequent cost also, which is a huge cost, subsequent cost. For example, initial cost, okay, initial costs. The company has purchased a truck. The company has purchased a truck for rupees 50 lakhs for the purpose of transportation of goods, okay. Is this a PP? Is this a PP? Answer is yes. It is a tangible item held for use for the supply of goods and the life is more than 1 year. It is a PPE. What is the accounting? PPE account debit to bank, credit. What is the amount? 50 lakhs. Okay. 50 lakh is the amount. Okay. So now let's talk about the subsequent cost. Subsequent costs. What could be the subsequent cost? What could be the subsequent cost? Regular service of the truck, right? Like regular service of the truck. Sorry. So there could be subsequent cost. What could be the subsequent cost? Regular service of the truck. For example, change of engine oil, air filter, oil filter, etc. Okay. So regular service of the truck, for example, change of engine oil, air filter, oil filter. Okay. What could be the other cost? Change of tires after, or let's say change of engine after 10 years. Okay. So we expect that in 10 years, this truck will run for 2 lakh kilometer. And after 2 lakh kilometer, this engine needs to be replaced. The life of this truck is, for example, 15 years. 15 साल की life है truck की. Okay. 15 years. So friends, one, there is a regular service. One, there is a day-to-day service or regular service. Day-to-day service or regular service, oblique regular service. Other which is major replacement or overhauls. Okay. Which is not regular, major replacement or overhauls. So friends, Ind AS 16 says that whatever recognition criteria you apply for initial cost, what is the recognition criteria of PP for initial cost? Future economic benefits should be probable and cost can be measured reliably. The same criteria you should apply for subsequent cost also. For example, the life of the truck is 15 years and you purchase the truck. After 10 year, you are replacing the engine. Engine is one of the major component in the truck. Okay. Engine is one of the major component in the truck. So after 10 year, if you are replacing the engine, you are doing a major replacement and overhauls. In that case, Ind AS 16 says that, for example, you have purchased the truck for 50 lakh rupees and you have to spend 20 lakh rupees on the engine of the truck, for the replacement of engine of the truck. 20 lakh rupees, right? So this is a major replacement or overhauls. Okay. So in this case, what is the recognition criteria? Future economic benefit is probable. If you will not replace engine, will you able to run the truck? Answer is no. And hence, this major replacement will provide you future economic benefit. You will be able to run the truck for another 5 years. The total life of the truck is 15 years. So you'll be able to run the truck for another 5 years. Okay. Number 2, whether cost can be measured reliably. Yes. Since you have purchased the engine, you know the cost. Okay. So it means, what does it mean? It means whatever subsequent cost is there, it has to be capitalized. Okay. It has to be recognized as a PP. So what about day-to-day service cost? Sir, if I will not get the service done, I will not be able to run the truck in future. For example, if I'll not change the engine oil, I will not be able to run the truck. So whether future economic benefit is probable? Answer is yes. Whether cost can be measured reliably? Answer is yes. So sir, can I also capitalize the cost of engine oil? Answer is no. Standard says that day-to-day servicing cost, regular servicing cost is not going to be capitalized. It is not a PP. Even it is not meeting the definition of PP. But the major replacement, overhaul cost, major inspection cost, these are meeting the definition of PP. Number 1, it is meeting the recognition criteria. Recognition criteria तो छोटी-छोटी जो repairs होती हैं वो भी meet करती हैं recognition criteria, right? आप अगर सर्विसिंग नहीं कराओगे व्हीकल की, कार की, मशीन की, तो मशीन चलना बंद हो जाएगी. So if I talk about recognition criteria, वो तो सब meet करती हैं. But you need to understand, is it also meeting the definition of PP? For example, regular service has to happen in every 6 months, every 10,000 kilometer, every 20,000 kilometer. It is a regular phenomenon, right? It is a running cost kind of a thing. But if I'm talking about engine, are you going to replace engine every 9 months, every 10 months, or every 1 year? Answer is no. It has to be replaced once in a lifetime. Probably. Okay. So in that case, it is considered as a major inspection, major overhaul, major replacement. So standard says that if there is a subsequent cost which the company is incurring, and that subsequent cost is a major replacement cost, major overhaul cost, major inspection cost, that cost has to be capitalized. That cost has to be separately capitalized when it is going to be incurred. Right? Is that clear? Sir, in this case, since you have took an example of this major replacement or overhauls, right? So let's say, can you elaborate with the help of an example how this accounting will be done? Example, the company has purchased a truck for rupees 50 lakhs for the purpose of transportation of goods. Okay. Transportation of goods on 1st April 2020. 2015, let's say. Okay, 2015. 1st April 2000. Let me write 1st April 2014. Okay. The engine got damaged and requires replacement. And requires replacement. The engine got damaged and require replacement. He has spent rupees 20 lakhs on the replacement of the engine as on 1st April 2024. Or let's say 31st March 2000, whatever, on 1st April 2024. Okay. The life of the truck is 20 years. The life of the truck is 20 years. Okay. Advise how the initial cost and subsequent cost can be accounted in accordance with Ind AS 16. Question is clear? This kind of question may asked in exam, right? Question is clear or not clear? It is clear. The question is clear. Okay. So initial measurement. Solution. Initial measurement. Truck. PPE account debit. To bank account. Credit. 50 lakh. Okay. 50 lakh. Is that clear? And what is the per annum depreciation? This is 1st April 2014. 1st April 2014. What is per annum depreciation? Depreciation per annum. You are right. 50 divided by equal to 50 lakh divided by 20. So 2.5 lakh every year. 2.5 lakh every year. Okay. 2.5 lakh every year. Correct. So every year end, what is the accounting entry? Depreciation account debit to accumulated depreciation account. Credit. Every year, what is the accounting entry? 2.5 lakh rupees of depreciation. I hope you guys are okay with this accounting entries. So far, you guys are okay with this accounting entries. Okay. Now, what happens on 1st April 2024? What happened on 1st April 2024? 1st April 2024. Replacement of engine event is there. Replacement of engine. Friends, tell me whether this replacement of engine is a major replacement. It's a major overhaul, major maintenance. Yes or no? It's a major maintenance. Yes. This replacement of engine is a major maintenance. It's a major overhaul. Yes. Yes or no? Yes, it's a major maintenance. It has to be capitalized. It has to be capitalized or not? It is meeting the definition of PP. It is meeting the recognition criteria. It is meeting the recognition criteria. It is also meeting the definition of PP. Correct? It is also meeting the definition of PP. Correct? So what is my, let me prepare you, let me prepare this FAR, fixed asset register for truck. Fixed asset register for truck. What is the gross block? What is the gross block? What is the accumulated depreciation? And net block. Net block. Okay. Gross block, accumulated depreciation, net block. What is the gross block of the truck? 50 lakh rupees. 50 lakh rupees. All amount in lakhs. Amount is in lakhs. Amount in lakhs. What is the accumulated depreciation up to 31st March 24? What is the accumulated depreciation up to 31st March 24? 2.5 multiplied by 10. Okay. Up to 31st March 24. But the gross block of the truck is 50 lakh rupees. Okay. And how much money you have invested in replacement of engine? How much money you have invested in replacement of engine? So let's not talk about accumulated depreciation or net block. We will talk later on. Let's only focus on the gross block. 50 lakh. Cost of the truck. Cost of truck. 50. Now you are saying that we need to capitalize the engine also. The cost of the engine is 20 lakh. What is the gross block of your truck now? What is the gross block of your truck? Your truck gross block becomes 70 lakh now. Don't you think now your truck has two engine in the books of accounts? Your truck has two engine. One, you purchase the truck in 50 lakh rupees, right? You purchased the truck in 50 lakh rupees 10 years ago, and that truck was having one engine. Now that engine got discarded, that engine got damaged, and this engine requires replacement. So this engine needs to be removed and new engine needs to be capitalized. New engine needs to be capitalized. So friends, when I'm capitalizing this new engine, don't you think this truck will have two engine in the books of accounts? So Abrikes is saying, sir, we need to scrap the old engine. Ginny is saying, sir, we have to eliminate the cost of old engine by its WDV. You are right. But the problem is, Ginny, how can I compute the cost of the old engine? How can I compute? Because when you purchase the truck in your invoice, the value was of truck only. The value was not bifurcated between the engine and rest of the truck, right? While it is a major component. Okay. But the problem is, Ginny, when you bought the truck, you got the invoice where only truck was written. Your invoice does not have a breakup that this 50 lakh includes so much of engine cost and remaining of other than engine. Okay. This does not have a breakup. So my problem is, if I will do have a breakup, अगर मेरे पास breakup होता तो मैं क्या करता? टोटल तो 50 लाख रुपीस है, बट उसको सेपरेट में उसको क्या करता? सेपरेट में उसको डेप्रिसिएट करता, उसकी WDV निकालता. ओके. और फिर मैं उसको डिस्कार्ड करता, स्क्रैप करता. बट I don't have the WDV. I don't have the WDV. So friends, standard says that if there is a major replacement and major overhauls, in that case, you have to capitalize the new component and you have to decapitalize the old component, right? So in case of major replacement and overhauls, new cost needs to be, new cost of component needs to be capitalized, and old component cost needs to be decapitalized. Okay. Old component cost needs to be decapitalized. needs to be decapitalized. Okay. If old component cost value is not known, the current component cost needs to be taken to arrive at the cost of the new component. Friends, what is the cost of the new engine? What is the cost of the new engine? The cost of the new engine is 20 lakhs. If today's cost is 20 lakh and I have to compute the engine cost for 10 years ago. How can I compute the engine cost of 10 years ago? If I discount this 20 lakh prior to 10 years ago, I will get the present value. I mean to say, I will get the value of this 20 lakh, which is today it is 20 lakh. So what was the value of 20 lakh 10 years ago? Correct. 10 साल पहले इस 20 lakh की value क्या थी? Means I need to discount this 20 lakh. Okay. So in this example, assuming, or let's say, let me tell you the discount rate also. The discount rate is 10%, right? So when I have not written this discount rate in the question, because if I would have written the discount rate in the question at the first stage, you will not be able to understand the purpose of this discount rate. Okay. So it means if I have to arrive at a cost of new component, cost of engine as at 1st April 2014. How to arrive at the cost of engine as at 1st April 2014? How to arrive at the cost of engine? कैसे arrive करूं? Present value of current cost on the date of original purchase. Okay. Present value of current cost on the date of original purchase. What is my current cost? 20 lakh. 20, 1, 2, 3, 4, 5. It is 20 lakh. My current cost is 20 lakh. My current engine cost 20 lakh. What is my present value factor? My present value factor is 1 plus 10%, 1 plus 10% to the power 10. I have to compute this discounted value 10 years ago. 10 years ago, it is 2.59. Okay. So what is my present value? Into 1 plus 10% to the power 1 plus 10% to the power 10. It is coming at 20 lakh rupees, right? This is right. So now I need to compute what is the WDV. What is the WDV of my old engine? This is my estimated. This is my estimated value of old engine. This is my PV. Estimated value of old engine, right? This comes out at estimated value of old engine. Friends, now let me compute the WDV for you guys. Okay, let me compute the WDV. Can I split this truck into two parts? Engine and other than engine. Engine and other than engine. Can I split this in two parts? Engine and other than engine. What is the value of engine? 771087. What is the value of other than engine? 50 lakh minus 50 lakh. 51, 2, 3, 4, 5 minus this value. So this is coming out at 50 lakh rupees, correct? What is my accumulated depreciation? So this is my computation of WDV. This is my WDV computation of WDV as at 31st March 2024. Okay, 31st March 2024. What is my accumulated depreciation, friends? Accumulated depreciation क्या होगा मेरा? 10 years का क्या होगा accumulated depreciation? This divided by what was the life of the truck? What was the life of the truck? The life of the truck was 20 years, na? This divided by 20, multiply by 10. Okay, multiply by 10. Same way, this divide by 20, multiply by 10. And पूरा कितना आना चाहिए? 25 lakh आना चाहिए, वही आ रहा है number. Okay. So what is the value of net block? Anyone who has not understood this calculation, anyone who have not understood this calculation, anyone who has not understood these calculations? First, I have arrived at the estimated WDV. मैं कैसे estimated value of the engine? I have arrived at the estimated value of engine. फिर मैंने क्या किया? मैंने ट्रक की वैल्यू को स्प्लिट कर दिया, इंजन एंड अदर देन इंजन. Correct? Then whatever period has elapsed, because on the day one there was no clarity on the component, there was no clarity. So the entire truck was depreciated over a period of 20 years, right? So what is the depreciation after 10 years? Divide by 20, multiply by 10. So it is 25 lakh only. So I bifurcated this 25 lakh into two parts. This is my net block. This is my net WDV. Correct? Correct? Okay. So now what is the accounting entry on replacement? What is the accounting entry on replacement? Accounting entry on replacement. On replacement. Okay. Accounting entry on replacement. First of all, new engine, PP, account debit. Account debit. What is the value of new engine PP? 20 lakh. Okay. 20 lakh is the value of new engine, which is PP. To bank. To bank. Simple. New engine to bank. Credit. By which value? 20 lakh. 20 lakh. Old engine. No, you need to credit old engine to old engine. So new engine being new engine capitalized in the truck. Now replacement of old engine. So two, because it is an asset, I need to credit to old engine. PP. Credit. What is the value? What is the value? 385,543. Okay. So loss on replacement. Loss on replacement account debit. 385,543. Okay. Sir, this old engine was sold as a scrap. Okay. Assuming old engine scrap was sold at rupees 1 lakh. What is the accounting entry? Bank account debit. Okay. Loss on replacement to old engine. Bank account debit. Loss on replacement debit to old engine credit. What is the accounting? Simple. 385,543. Bank account debit 1 lakh. Difference will go to the loss on PN. Okay. So this will be the difference. Now, what is the revise? What is my revise? Gross block and net block. On 1st April 2024. This is amount in rupees. Okay. Engine other than engine. Okay. I need to make two parts in my FAR. Yes, this is the actual practice which the companies are following. Now my engine gross block cost is 20 lakh. Okay. My accumulated depreciation is 0 because it's a new engine as on 1st April 2024. And my old engine is 4228. This is my old engine gross accumulated depreciation. This is my net block. So my total gross block as on 1st April 24 becomes 62 lakh 28,000, 21 lakh 14,000 is EGDEP, and 41 lakh 14,000 is my net block. My dear friends, this is kind of the accounting which will happen in case of a subsequent cost. Ind AS 16 says that whenever there is a subsequent cost in the form of major replacement, major overhauls, or major inspection, in that case, you have to do the component accounting for those major maintenance, major replacement, major overhaul, or major inspection, right? But in this example, as you visualize, if you will capitalize the new engine, you have to decapitalize the old engine. But in the beginning, this old engine value was not known. So you have to arrive at the old engine value. You have to estimate the old engine value. And the standard says that not to worry, use the current engine value to arrive at the old engine value by discounting it back to the date of original purchase, right? And then compute the WDV. And then recognize the loss and capitalize the new engine in the asset. Okay. Yes. If you have any question, would be happy to answer now. Friends, tell me, have you understood this concept or not? Have you understood this concept or not?
So the old asset is to be replaced from the register now. The 2 times you entered the loss on
Yes.
the assets.
Yes. The old asset has to be, removed from the register. You are right. The old asset has to be removed from the register.
It is not showing there, no? Please.
So in that case, you can net it off from the truck itself. Okay. Because, when you have capitalized this truck, you are not estimated that my engine will be damaged after 10 years. Okay. In that case, you have only capitalized truck. So you have to net it off with the value of the truck. You have to do this calculation for the purpose of accounting. Okay. And in the practical world, like in the case of aviation, airline industry, all these airline industry are doing this kind of accounting. Correct? But when you have actually replaced this engine, in that case, in the fixed asset register, the main line is truck. But in the fixed asset register, the sub lines will be engine and other than the engine, right? So Abrake, so let me complete first, then you will ask your query. Now, why the standard talks about? In our old accounting standard, this kind of concept was not there. But in our new accounting standard, AS10, the same concept is there, right? What is the purpose of this concept? Number one, friends, whenever you are purchasing an asset, that asset will give you future economic benefit. For example, machinery, you have spent 100 crores in a machinery, in a plant. Plant means factory. Okay. So this 100 crore you have spent today, and you will get the future economic benefit for the next 50 years. So you will earn the money in the next 50 years, but you have spent 100 crores today, right? Going by the matching concept, don't you think you should not expense of this 100 crore today itself, right? नहीं करना चाहिए expense of, तो क्या करना चाहिए? It is an asset, it is a PP, it has to be capitalized, but you are aware that after 50 years, my value of the asset will become negligible. And again, I have to reinvest in my business. So in that case, every year you're earning some money every year. Okay. And every year you are also putting a notional charge in your P&L. वो notional charge का नाम क्या है P&L में जो आप charge करते रहते हो हर साल? That is depreciation. Right? So instead of to debit this entire 100 crores in the next 50 years, right, by the matching concept. Again, every year you are getting the cleaning, servicing, small tools and spares for this plant, this factory, this machinery. So every year you are incurring an expense and you are debiting to your P&L because it's a regular expense. Okay. But after 25 years, there was a major replacement which was happened in the plant, major replacement. And this has costed around 30 crore rupees. This has costed around 30 crore rupees. Okay. Friends, two questions I want to ask from each one of you. If this 30 crore would not have been spent, whether the company would be able to run this plant for the next 20-year, answer is no. Or 25-year, answer is no. Number two, whether this entire 30 crore has to be expensed off in the current year itself. What is your view? The current year revenue is 5 crore and the current year one-time cost is 30 crore for this plant, which will give me future economic benefit for the next 25-30 years. So don't you think instead of charging it to the P&L straight away in this year itself as a repair and maintenance, is it a repair and maintenance? It's a major maintenance. It's a major maintenance. So don't you think we need to capitalize this major replacement expense and we need to charge in the form of depreciation for the remaining future economic benefit life? But again, the question arises, sir, like in case of truck and engine, we understood that if you are capitalizing the new engine, we understood that the major cost is there and you need to depreciate. But sir, what about the actual component which was there? So friends, standard says that not to worry. Decapitalize the actual component. Sir, but the actual component was not segregated earlier. Standard says not to worry. Not to worry. You have the current cost. Go back.
In
Concept,
progress.
my dear friends. Okay. This is the or small items. Think about the big company. Standard has been made for everyone. Right. If I talk about the airline industry, that they have a big impact. अगर ये concept नहीं होता, these airline industry will have a lot of, lot of YOY, lot of, impact, lot of variations in their P&L every year. Okay. So this was the concept, my dear friends. And this concept was greatly utilized in the practical life of many companies. Okay. Sir, earlier you do not have provide discounting rate. That's why I could not answer your question, but about the old machinery cost, not to worry, Ginny. Intentionally, I have not given the discounting rate because when initially I have given the discounting rate, everyone was thinking, acha discount rate diya to yahi kar dete. I want to explain you the concept, then I have put at the discounting rate. Okay. I hope now things are clear to all of you. Yes? Yes or no? Yes, Abrukes, now you can ask your question.
Sir, accounting entry for reversing the value of a gross block of old engine is not required. Here you have shown net effect of the,
I have shown you the net effect, but alternatively you can pass that entry also. Let me
full entry, but it will do if we just pass the entry for net block.
Both the entries are okay.
Okay.
If you want
Okay.
to pass this this actual
That
entry,
is
you can
fine.
pass
Yes,
this
yes.
also.
That is fine.
Accumulated depreciation account debit, because it is a credit balance.
Yes,
We need to
385.
debit this. We need to reverse this number.
Yes.
To gross block. To old engine, let's say, to old engine. Let me use this. Old engine PP at gross block. Credit. What is this value?
771087.
Loss on replacement debit. This
Same.
minus this. Okay. Sorry.
Yes.
This minus this. So any of the entry you can pass.
Okay.
You will get the full marks, not to worry.
Okay.
Right? You will
Thank
get
you.
the full marks.
Yeah.
Okay. So I hope you guys have understood the concept. This is one of the most important concept, my dear friends. Right? Which may be asked in the examination. So it's 8:32 now. Let's have a 8 minutes break and we will start our lecture at 8:41. Okay. Break time. understood the concept of subsequent cost, right? So in three cases, when there is a major replacement, when there is a major overhaul and major inspections, in that case, the new component needs to be capitalized and the old component needs to be decapitalized. So student, in real world, in airline companies, right? So let me take you another example with all of you. Jet Airways Limited purchased an aircraft for rupees 1 crore, right? The life of the aircraft is 20 years. As per the DGCA rules, right? This aircraft has to be undergone with the major inspections, every 5 years, right? Every 5 years. Such inspection cost is rupees 15 lakhs. Okay. Suggest the component accounting under Ind AS 16. Friends, standard says that whenever there are major inspection, what is meant by major inspection? If there is a rule of any authorities like DGCA, Director General of Civil Aviation, or ICAI, Airport Authority of India, if the rule says that to continue to operate an item, it is mandatory to get the inspection done, right? Like in case of aviation industry, this aircraft is dealing with this aircraft flew a lot of people, like 200, 300 people who are boarding the aircraft and they are traveling from one place to another, right? So at every time frame, after passing certain flying hours or after 4 years or 5 years, the DGC authority says that every aircraft has to undergo with a major inspection after a certain interval, for example, 5 years, okay, which carry a huge cost. Okay. So when the new aircraft came, when this company purchased a new aircraft, the cost was 1 crore. And the life was 20 years. Don't you think this aircraft has two major components with the two different lives? If I talk about this aircraft, this aircraft has two major components with the two different lives. Number one, aircraft. Number two, inspection component, right? Aircraft and inspection component. Okay. The total value of the aircraft is 1 crore. It is 1 crore. The total value of the aircraft is 1 crore. Okay. And the inspection component is 15 lakh. Because when you purchase a new aircraft, it is already inspected. The new aircraft is already inspected. वो तो पहले से inspect होके आया है ना. 5 साल के बाद आपको ये cost दोबारा देनी है. So what is the value of the aircraft other than inspection? अगर ये inspection की requirement नहीं होती तो most probably aircraft की cost 85 lakh होती. Okay. So this is my gross block. Now, accumulated depreciation after 5 years. What is my accumulated depreciation after 5 years? This 85 lakh needs to be depreciated over a period of 20 years, multiply by 5. But this 15 lakh has to be depreciated over a period of 5 years only. Divide by 5, multiply by 5. 15 lakh. So my net block at the end of 5 years, is how much? This minus this, and this will be my net block. My gross block is this one, correct? And again, I will capitalize 15 lakh rupees of my inspection component. Again, I will capitalize whatever I have spent at that point of time. Now, accumulated depreciation after 10 years. Again, I need to replace this major inspection. I have to get the inspection done. So after 10 years, what will happen? 85 lakh divided by 20 multiply by 10. But this 15 lakh was capitalized 5 years back only. So divide by 5, multiply by 5. Okay. What is my net block? What is my net block? My net block is this minus this. Okay. This is how this accounting has to happen, right? Is that clear, friends? Is that clear or not clear? Tell me. Is that clear or not clear?
The totaling needs a formula to be inserted, sir. It is 1 crore.
Sorry?
In all, the total of gross block, accumulated depreciation.
Oh,
net
sorry.
block.
Sorry. Yes, you're right. So let me, because yes. Is it okay now?
Yes, sir. Thank you, sir.
Right? So this is how this accounting has to happen in case of major inspection, major replacement, major overhauls. Now let's discuss a question from ICAI study material. So subsequent cost we discussed, the same recognition criteria will be there. And whenever the subsequent cost will happen, and if the useful life is different from that component, it has to be depreciated separately. Illustration number 8. Illustration number 8. MS Limited acquired a heavy machinery at a cost of rupees 1 crore with no breakdown of the component parts. So when this company purchased this machinery, the total cost was 1 crore, okay? And there was no breakdown because the invoice which the company has received, in the invoice only machinery was written. The estimated useful life is 10 years. If the life is 10 years and the cost is 1 crore, what is my per annum depreciation, friends? What is my per annum depreciation? 10 lakh rupees, 1 crore divided by 10, 10 lakh rupees, correct? Okay. Okay, very good. At the end of the 6th year, means after 6 years, one of the major component, the turbine, this machine includes a component which is known as a turbine. Okay. One of the major component which is turbine require replacement as further maintenance is uneconomical. The remainder of the machine is perfect and is expected to last for the next 4 years. Same concept like truck and engine. In this case, this machine requires replacement. This machine requires replacement. And this machine means this turbine require replacement. And the other parts other than turbine is running perfectly fine. But of course, if you will not replace turbine, this entire machinery will not be able to run. Okay. Friends, in this case, this turbine require replacement, but the breakdown of the cost is not given. And the cost of new turbine is also given. It is 45 lakh. The discount rate is also given in this question. I don't know what is the use of this discount rate, but it is given in this question. Friends, you tell me please, what is the benefit of this discount rate which is given in the question? Analyze whether the cost of the new turbine can be recognized as an asset, and if yes, then apply the accounting treatment relevant to it. So any student who can unmute and explain the answer, I'm not talking about the number, but at least who can guide me how to solve this question.
Sir, Abrakesh.
Morning, sir.
Yes, Abrakesh. So who's the other lady? What's the name?
Anila, sir. Anila.
Anila. So Abrakesh, so let me give a chance to Anila because yes. Yeah,
So
Anila.
actually, beginning we will account it for 1 crore and we will be calculating depreciation 10 lakhs per year. At the end of 6th year, actually, we will compute the beginning cost of that 45 lakh, taking that component cost as 45 lakhs and discounting it with the 5% rate. And also the depreciation part we will take separately and reduce it. Means we will decapitalize the component and we will add the new components, sir.
Very good. Very good. So you're absolutely right. So what we have to do, first of all, the cost is 1 crore. So machine account debit to bank account 1 crore. Then every year we will charge depreciation account debit to accumulated depreciation. We'll do this thing for the next 6 years. So till the end of 6 years, we have 1 crore rupees as a gross block, 60 lakh rupees as a accumulated depreciation, right? At the end of 6th year, when we reached to at the end of the 6th year, we found that this turbine required replacement. So we bought a new turbine. We made an accounting entry, turbine account debit to bank 45 lakh. Then we have capitalized the turbine. Now we have to decapitalize the old turbine. So for that, we need to estimate the original cost of the old turbine. So what we did, we went back, we discounted this 45 lakh by using the discount rate of 5%. So what was the value which we got? What was the value which we got? We got the value of, you know, if the new turbine value is 45 lakh, what is my estimated value of the turbine? 45 lakh divided by 1 plus 5% to the power 6. Okay. So this 3 lakh, not 3 lakh, sorry. 33 lakh 57,970 is the value of the original value of the turbine. All right. Original value of the turbine. So the cost of the asset. Now what was my cost of asset? My cost of asset was 1 crore. My cost of asset was 1 crore. Okay. My cost of asset was 1 crore. And this is the estimated turbine value. Estimated turbine value. What is the value of other than turbine? Other than turbine? 1 crore minus 3357, 66 lakh 42,000. Right? This is my gross block. This is my gross cost, gross block. What is my accumulated depreciation? So technically, the life was 10 year, multiply by 6 year has already gone. 60 lakhs should be the depreciation. So I will split this depreciation into the value of the component, right? This divide by 10, multiply by 6. This divide by 10, multiply by 6. So total should be 60 lakh. So total to 60 lakh hi aayega. Total is 60 lakh. Okay. So now I got the value of the turbine, net block of the turbine. So what I will do, this 13,43,188, when I will decapitalize the gross block of turbine, accumulated depreciation I will reverse, and this I will charge to the P&L as a loss. Okay. And if I'll get something from sale of the scrap, so bank will be debited and your loss will be reduced to that extent, right? So this is how you will decapitalize the old component and capitalize the new component. Okay. This is how you need to do the working. So this is which is given in this question. The new turbine will produce economic benefit to MS Limited and the cost is measurable. Hence the items would be recognized as an asset. The original invoice for the machine did not specify the cost of the turbine. However, the cost of replacement is 45 lakh, can be used as an indication, usually by discounting of the likely cost 6 years previously. If an appropriate discount rate is 5% per annum, 45 lakh discounted back 6 years amounts to 33,57,900, rounded off in the near 100. That is the approximate cost of turbine before 6 years. The current carrying amount of the turbine which is required to be replaced is 13,43,160, would be de-recognized from the books of accounts. That is original cost as reduced by the accumulated depreciation for past 6 years, which is 20,14,740, assuming depreciation is charged on straight line basis. Whenever the question is silent, you need to think about straight line basis, right? The cost of new turbine, 45 lakh, would be added to the cost of the machine, resulting in the revision of carrying amount of machine to 71,56,840. 40 lakh minus 13,43,160 plus 45 lakh. This is the value of the new turbine. Okay, this 40 minus 13 plus 45. Original cost of the machine 1 crore reduced by accumulated depreciation till the end of 6 years, that is 60 lakh. Okay. I hope it is clear to all of you. The same question which I have covered, the discount rate was 10%. The truck cost was 50 lakh. The engine cost was 20 lakh. But exactly the concept is same. The concept is same. Correct? This is what we have discussed. Clear in mind or clear from mind? Clear in mind? Very good. So this major inspection I have also covered. This example I have covered. Friends, now we discussed the definition of property, plant and equipment. We understood the recognition criteria in case of initial cost and in case of subsequent cost. Always remember, just put your hand on heart and always remember that whenever there is a subsequent cost and if it is non-recurring in nature, if it is major in nature, for example, it is on account of major inspection, if it is on account of major replacement, major maintenance, overhauls, in that case, those component needs to be capitalized and the earlier component needs to be decapitalized. This question may be asked in your examination where such kind of a concept will be tested from the participants or from the students. In that case, my dear students, just think about that whatever the value of the new item is there, it has to be capitalized, but the old component needs to be decapitalized. So how to decapitalize? First, you have to arrive at the value of the old component. Then whatever year has been passed, you have to compute the accumulated depreciation on that. Whatever is the carrying value, you need to debit that carrying value into your P&L as a loss, reduced by if there is something which you are receiving from the sale of scrap, right? And if the question will ask you what is revised gross block, then what you are required to do, the total value, the total cost of the asset, like 1 crore in this case, in case of turbine, it is 1 crore. In case of machinery, it is 1 crore. In 1 crore, the estimated cost of the turbine, the gross value has to be reduced and the new turbine value has to be added, right? और नेट ब्लॉक कैसे होगा? नेट ब्लॉक भी वैसे ही होगा, रेस्पेक्टिव एसेट्स की वैल्यू में से आपने एक्यूमुलेटेड डेप्रिसिएशन को कम किया है, तो जो बचा हुआ कंपोनेंट है उसमें से आप नेट ब्लॉक निकालने के लिए डेप्रिसिएशन कम करोगे और नए टरबाइन की कॉस्ट को कैपिटलाइज करोगे, वो आपका नेट ब्लॉक होगा. आई हैव ऑलरेडी एक्सप्लेन्ड इन माय example of truck and engine in the Excel file, right? Revise gross block, revise accumulated depreciation, revise net block, opening gross block, correct? I have already explained this concept. Now, friends, the question comes, okay, you guys have concluded that it is your PP. You guys have concluded. For example, Ginny is an article. She is maintaining the books of accounts of a company and that company has purchased a truck. Ginny has told, see, this truck is meeting the definition of PP. This truck is meeting the recognition criteria to be recognized as a PP. So you need to capitalize the truck in the books of accounts. So the owner says, the CFO told that, okay, madam, please capitalize as a PP in the books of accounts. But the question comes, sir, what is the cost? What is the cost of this PP? Cost kya hogi PP ki, right? So the CFO is asking to Ginny that, Ginny, we understood that, you know, this truck has to be capitalized as in the books of accounts, but at what cost? But at what value? So Ginny told that this truck has to be capitalized at cost. Whatever cost you have paid, whatever money you have paid, whatever consideration you have paid to acquire the truck, that is the cost, okay? And PP are initially measured at cost on the transaction date. Now CFO told Ginny, see, I have also purchased a machinery from China. Okay. Ginny told, okay, sir. And the CFO is explaining that, see, and student, please write down this example in your notebook. CFO is telling that, Ginny, I have purchased a machinery from China and this machinery I'm purchasing from Shanghai. The cost of machine is 10 lakh rupees. The cost of machine is 10 lakh rupees, right? This machine will travel from Shanghai to India port, to Kandla port, right? It will cost the freight cost will be around 2 lakh rupees, and I have to bear that cost. The 2 lakh cost I have to bear. So this transportation cost is 2 lakh rupees from Shanghai to Kandla port. There is a import duty also. There is a non-refundable import duty, custom duty, which this company has to pay, and the import duty is 1 lakh. The transportation cost is 2 lakh, import duty is 1 lakh. Now when this machine will arrive at Kandla port, from Kandla port to the factory, which is in Delhi, so the additional transportation cost, the freight cost will be 50,000 rupees. Okay. So now the machine has reached to the factory. 10 lakh rupees the cost of the machinery, 2 lakh rupees the transportation cost from Shanghai to Kandla, and 1 lakh rupees the custom duty. Okay. And 50,000 rupees from Kandla port to Delhi factory. And now this machine, if this company has to use this machine requires some installation. This machine requires some installation. This machine needs to be installed, right? So some concrete working should be there. It means some area needs to be excavated. There is some, there is some cement kind of a platform needs to get ready. There is some civil work, and then machine needs to be installed. Okay. So these things have to happen in this case of machinery. Now the question is, and the installation cost of the machinery is again 1,50,000 rupees. Now the question is, at what value this machine will be capitalized in the books of accounts? Standard says that machine, I mean to say PP, initially has to be measured at cost. And what is the meaning of cost? Cost means, cost includes purchase price including import duties and non-refundable purchase taxes after deducting trade discount and rebates. Purchase price is 10 lakh rupees in this case, right? Including import duty, custom duty is 1 lakh rupees in this case, right? And non-refundable purchase taxes. If the company has paid any GST, if the GST is refundable, it is not a cost. But if the GST is non-refundable, the company cannot take the input credit of the GST. In that case, it will become part of your cost of the machinery, right? So purchase price, including import duties and non-refundable purchase taxes. Less if the company has got any discount on such purchases, this discount has to be charged to that machinery, right? So this has to be, this discount has to be, this discount will reduce the value of the machinery, right? So this discount is also reducing from the purchase price for the purpose of capitalization of machinery. Plus directly attributable cost. What is meant by directly attributable cost? Any cost which is directly related to bringing the asset into the condition and location for available for use. कोई भी cost अगर company incur करती है, if any cost has to be incurred to bring that asset, उस asset को उस situation में लाने के लिए, कौन सी situation में लाने के लिए, जो उसको use में लाने के लिए requirement हो, right? So if the company has purchased a machinery from China, and if that machinery would not have traveled from China to India, whether the company will be able to use that machinery? Answer is no. And whether it is a directly attributable cost means this cost would not be there if the machinery would not be there. Answer is yes. ये वाली cost directly related है, correct? So hence it is a directly attributable cost. Whether installation cost is a directly attributable cost? Answer is yes. It is required. It is available for use. And this installation cost would not be there if the machine would not have been purchased, right? So friends, directly attributable cost is also required to be capitalized. Number 3, initial estimate of the cost of dismantling and removing the item and restoring the item. Friends, decommissioning cost, site restoration cost is also going to be capitalized. Site restoration cost is also going to be capitalized, right? Sir, please explain with the help of an example. The third part we have not understood. No problem. Let me explain you the subsequent cost example. Sorry, not subsequent cost, the measurement at initial measurement. Measurement at initial recognition. Standard says that initially the PPE has to be measured at cost. It has to be measured at cost. Now, what is meant by cost? Cost is equal to what? Purchase price. Okay. Plus purchase price plus import duties. Okay. Plus non-refundable taxes. For example, GST, in case input credit will not allowed. Okay. Minus trade discount and rebates, if any. Okay. If any. Okay. So this is number one. Plus. So number one, purchase price plus. Number two, directly attributable cost. What is meant by directly attributable cost? Directly attributable cost means this cost has been incurred directly in relation to that PPE, that asset. Okay. Means the cost has been avoided if the asset has not been purchased, has not been acquired, right? अगर asset नहीं होता तो ये cost भी नहीं होती, means directly related है. Okay? Third, estimated decommissioning cost or site dismantling cost Okay. Example. ABC Towers Limited has installed the telecom tower and spent 20 lakh for the purchase of tower material. Okay. And spent purchase of tower material 5 lakh on the assembly and installation, and 2 lakh on the civil work. Okay. The life of the tower is 20 years, and after 20 years, the company is required to decommission, or the company is required to dismantle the tower and restore the space in the same condition which was there before installation of tower. Right. Calculate the cost of PPE tower. In this case, and help with the accounting entries. And help with the accounting entries. Nisha, do you have question here?
I might be the doubt that I had was this 20 years later we'll have to undergo this restoration cost, no, sir. Will we have to look at the discounting factors here also?
So Nisha, so let me explain that. So as of now, I haven't explained this concept, right? So let me explain that. Okay. And so in the question, it is also given that the estimated cost of decommissioning, and restoration comes out at rupees 10 lakh. 10 लाख रुपए का खर्चा आएगा जब इसको 20 साल के बाद डीकमीशन, डी इंस्टॉल और जब इसको रीस्टोर करना पड़ेगा 10 लाख रुपीस का खर्चा आएगा उस जगह को ठीक करने में. This is the question. Now friends, I have to measure the cost of the asset. Now what is my cost of the asset? What is my purchase price of the material? What is my purchase price of tower material? Purchase cost of the tower material is 5 lakh rupees, right? Solution. But what is my purchase cost? My purchase cost is 5 lakh rupees. 5 lakh rupees. Okay. What is my directly attributable cost? My assembling and installation cost. Assembly and installation cost. What is that? My assembly and installation cost is
Sir, purchase cost 20 lakh hai.
Sorry, purchase cost is 20 lakh. Very good. And assembly and installation cost is 5 lakh. Okay. What is my civil work cost? My civil work cost for constructing the platform for the tower, my civil work cost was 2 lakh rupees, correct? Okay. So these are the costs which I'm incurring for the installation of tower. This is my purchase cost. This is my directly attributable cost. Okay. These are the costs which I have incurred. And friends, due to installation of tower, I have also entered into an obligation to restore this place after 20 years. And this will also incur a cost, right? क्योंकि मैं आज टावर लगा रहा हूं, due to installation of tower, I am entering into an obligation to restore that, to dismantle this tower after 20 years, to restore the place in the same condition, which will carry a huge cost. Asset retirement cost, asset retirement obligation, site decommissioning obligation, right? Site restoration obligation. Okay. So friend, standard says that due to recognition of a PP, if there is a future obligation to dismantle and restore the PP, to restore that space, right? In that case, that cost is also required to be added in the cost of the asset. That cost is also required to be added in the cost of the asset, right? So what does it mean? What is my decommissioning cost? What is my decommissioning cost? My decommissioning cost, which is given in the question, is 10 lakh rupees. But this 10 lakh rupees not today's cost. My decommissioning cost is 10 lakh rupees, but this is after 20 years. This is after 20 years. But I am capitalizing my PPE today. So how will I arrive at the estimated cost to be capitalized today? How can I arrive at this cost? So friends, again, whatever is the future cost, estimated future cost, I need to discount that cost today and I need to compute the present value of the estimated cost. For example, in this question, what is given? In this question, the discount rate is also given. In this question, the discount rate is given. The discount rate is 10% for the company. Okay. The discount rate given in the question is 10%. Is 10% for the company. What is the use of this decommissioning cost? This decommissioning cost will incur after 20 years. But why this decommissioning cost will incur? Because I have commissioned my tower today, right? So friends, in Reliance Industries Limited, you will also see the decommissioning obligation, asset retirement obligation. Why? Because they have taken from the government, they have taken oil wells in the seabed. And government told them that you guys have put a huge machineries in the seabed. You are extracting oil, okay? So after 30 years, I am giving you a license for, let's say, 30 years. So after 30 years, whenever you will go from this place, you have to restore this entire seabed and it will incur hundreds of crores of cost. So what they are doing, the estimated cost which they have to incur after 30 years, whatever is the estimated future cost, they are discounting that estimated future cost and capitalizing as an initial cost of the PPE, as an asset retirement obligation cost. Okay. So if the decommissioning cost is 10 lakh after 20 years, what is the present value of this decommissioning cost? What is the present value of this decommissioning cost, my dear friends? What is the present value of decommissioning cost?
1,48,643.
Present value of decommissioning cost on the day of initial recognition of PPE. 10 lakh divided by 1 plus 10% to the power 20. 1,48,643, right? This is what it is coming. 1,48,644. So friends, my initial estimated decommissioning cost is 148,644. This is my total value of PPE. This is my total value of PPE. So what accounting entry I need to pass? I need to pass the accounting entry PPE account debit. PPE account debit by what value? 28. To bank account. To bank account. Credit. Is this the right entry? This entry I am passing on day one. Is this the right entry?
No, sir.
What is wrong here?
Actual cash outflow for these decommissioning costs has been occurred. The 1 lakh.
Decommissioning cost नहीं आनी चाहिए इसमें.
Yes, you are right. So I am not paying today for the decommissioning cost. I will pay for decommissioning cost after 20 years. I am capitalizing, I am recognizing my PP as on date. So what will be my credit entry to bank account is 20 lakh purchase cost. Assembling installation I am paying. 2 lakh civil work I am paying. But my PP has been debited by 28 lakh. It means to the extent of future obligation, I will create a liability. I will create a provision. Provision for decommissioning obligation. Right? So for this, I will create a liability. I will create a provision for decommissioning obligation. Is that clear? Right? So this will be credited. What is the value? The value is 148,644. Sir, what will happen for this decommissioning obligation? This asset 148,644, this will be depreciated over a period of 20 years. What is my depreciation per annum? Tell me. My depreciation per annum will be how much? Is my depreciation per annum? 2848 divided by 20. 142,432 is my depreciation per annum. So with this, my decommissioning cost, which is added to the asset, will also be depreciated. But sir, what will happen this provision for decommissioning obligation? What will happen for this provision for decommissioning obligation? So what is the accounting entry? Friends, this decommissioning obligation, the first entry I have passed, asset account debit to to provision for decommissioning liability. Every year. So today I passed an entry of 1,48,000. After 20 years, I need to pay 20 lakh rupees. So how this 148 becomes 20 lakh? So
Sir,
let's see
every
here.
year.
Yes, every year you need to recognize the interest cost every year.
Yes.
Year. Opening balance of provision. Interest expense, right? Because you have only recognized 148, you have to pay 20 lakh, right? Then closing balance. You're not paying every year, you have to pay after 20 years. My opening balance of provision is 148. My interest expense at the rate of 10%, on which you have discounted at the rate of 10%. This multiply by 10%. What is my closing balance? My closing balance will be this one. Okay. At the end of first year. Now I have to do this calculation for the next 20 years. Okay. This will be my closing balance. So friends, likewise, let me drag this for 20 years. Let me drag this for 20 years. Let me drag this for 20 years. What is the value which you are getting? So after 20 years, you have to pay 10 lakh rupees. This is what which is there. This is what which is there, right? 10 lakh rupees. Okay. And every year, your asset has been depreciated. And every year you have to pass an accounting entry. Interest expense account debit, interest cost account debit, debit. To what? To provision for decommissioning obligation. Okay. Credit. By what? Every year, to the extent of interest expense, you have to pass this accounting entry. Okay. Is that clear to everyone, friends? Is that clear to everyone? Yes or no? Yes, it is clear.
Yes, sir.
Clear or clear? Clear? Ayush, is that clear? 10 lakh is the future value. Okay. 10 lakh is the future value. So that is why I have arrived at the discounted price of 10 lakh today. कि आज क्या वैल्यू होगी? अगर 10 लाख वैल्यू है 20 साल के बाद, तो आज वैल्यू क्या होगी उसकी? आई हैव जस्ट डिस्काउंटेड इट. Sir, instead of discounting, if today I am aware that, let's say, today's cost of such decommissioning is, let's say, 2 lakh rupees. In that case, I can take 2 lakh rupees. Okay. I can take 2 lakh rupees. Is that clear? Okay. So friends, let's go to the ICAI study material. Let me open the study material. Please confirm once the study material is visible. Just a minute. Okay, instead of that, let's discuss this question. So directly attributable cost we discussed. Cost directly related to bringing the asset to the location and condition necessary for it to be capable of operating the manner intended by the management. Example, employee benefit cost during the construction of PP, site preparation cost, initial delivery and handling cost, installation and assembly cost, professional fee, cost of testing whether the asset is working properly after deducting proceeds from sale of any product produced during the testing period. You know, metro, factories. So there is a trial run expenses also. And during the trial run, there are some production of goods and production of goods. So the trial run expenses are also going to be capitalized, because if the trial run will not be successful, the asset is not available for use. So trial run expenses is a directly attributable cost. During the trial run, for example, before running the metro, before the official launch of the metro has announced a trial run period. Okay. So in that trial run period, metro told that if anyone who wants to board the metro, he has to pay, or she has to pay 25% of the ticket cost. So there is a trial run expenses which is incurred by the Delhi Metro Rail Corporation Limited, and they are also collecting revenue from the sale of tickets. So whatever revenue they are generating from the trial run period, it has to be reduced from the trial run expenses cost. Okay. What is not directly attributable cost? Let's discuss this also. Cost of conducting business in a new location or with a new class of customer. For example, the company has installed that plant in China. The company has decommissioned its plant in India, and the company has installed a factory in China. For that, the company is providing the training of Chinese language to all of its workers. So this cost of conducting business in a new location or with a new class of customer is not a directly attributable cost. It has to be charged to the P&L. Cost incurred in introducing a new product or services, right? So the company has, hired Mahendra Singh Dhoni for introducing a new product or service. So Mahendra Singh Dhoni will take 10 crore rupees. So this is like an advertisement cost of brand production, brand promotion. So this will not be capitalized as a cost of PP. This will be charged to P&L. Cost of opening a new facility. The company has opened a new factory, a plant, and company has invited Mr. Amitabh Bachchan to inaugurate that factory or a plant. Okay. In that case, this cost of opening a new facility, right? This cost of opening a new facility means the company is paying 2 crore rupees to Mr. Amitabh Bachchan for the purpose of inauguration. This cost is a P&L cost. This is not a directly attributable cost. So even though if Amitabh Bachchan would not have come, the company would be able to run, right? So if the owner will cut the ribbon, so still the company, the factory, the plant is available for use. Okay. Administrative and other general overhead cost, like security guard expenses, audit fees. So these are not the cost which is going to be capitalized. For example, the construction work is going on. There is a security guard who used to watch the construction, who used to ensure that the trespassers should not enter into that premises, who is ensuring that no any loss will be there. So these kind of expenses like security guard expenses, accounting expenses, audit expenses, right? So these are the administrative and other general overhead cost, which is not going to be capitalized as a cost of construction. Okay. Decommissioning cost we discussed. Friends, I have a measurement and initial recognition case study 4. Friend, this case study you will find in your ICAI study material also in bits and pieces. And this is a complete and comprehensive case study on the cost, measurement of cost, right? So let's discuss this case study, which will give you the entire picture of the concept of measurement at cost. ABC Limited purchased furnace machinery for a gross price of rupees 200 crores. The seller granted 0.5% rebate on the gross price of the machinery. What is the purchase price? What is the purchase price of the machinery? Can you please start writing down on your notebook? The purchase price of the machine is 200 crores. What is my rebate on the price of the machinery? 0.5%. Whether this rebate will be reduced from the cost of the machinery or not, it has to be reduced. So what is the value of the rebate? 200 crore multiplied by 0.5%. 200 multiplied by 0.5% comes out at 1 crore. 1 crore ही आएगा ना, 200 multiplied by 0.5%, 1 crore. The gross price includes excise duty of rupees 20 crores, for which input credit can be claimed by the company. And this gross price includes 20 crore of इनपुट क्रेडिट 20 करोड़ ऑफ जीएसटी, इस ग्रॉस प्राइस में 20 करोड़ जीएसटी भी इंक्लूड है इस ग्रॉस प्राइस में। तो क्या करना है, क्या करना है?
Exclude.
Exclude. Why? Because input credit can be availed. If the input credit would not have been availed, then it will become cost. It will become cost, means it will become cost of PP, cost of machinery. So what we have done, purchase price minus rebate minus refundable taxes. So my purchase price, my first leg, purchase price including import duties, including non-refundable taxes, less discount and rebates. So 179 crore is my purchase price, net. It also incurred 15 crore as a transportation cost, handling charges and insurance. 5 crore for installation and 3 crore for testing and professional fees. Some directly attributable costs are also given, right? So what is the treatment of 15 crore, 5 crore and 3 crore? It has to be added to the cost of the asset. It has to be added to the cost of machinery, correct? Okay, 15 plus 5, 20 plus 3, 23 crore. So this 15, 5 and 3 has been added. It has earned rupees 0.2 crore, right? It has earned 20 lakhs from selling goods produced out of testing. During the trial run, the company has spent 3 crore. The company has spent 3 crore during the trial run. And the company has also earned 20 lakh rupees from the goods sold out of the trial run expenses. So in the trial run period, the company has sold some goods, right? And the company has generated 20 lakh rupees. So what is the treatment of 20 lakh rupees? It has to be reduced. It has to be reduced from the trial run expenses. So 3 crore minus 0.2 crore. 2.8 crore is my net expense, which is going to be part of my cost of machinery. So 15 plus 5, 3 minus 0.2, 2.8. 2.8, okay. The company borrowed rupees 100 crore for financing the new purchase at the rate of 10%. This is a qualifying asset, right? So the company has also borrowed 100 crore for financing the new purchase at the rate of 10%. Because this machinery requires, transportation, handling, installation, etc., etc. So company borrowed 100 crore for financing the new purchase at the rate of 10%. The company has taken a loan for the purpose of this purchase and installation of machinery. The entire process of the purchase to make the operation took 15 months. From the date of purchase to make it available for use, it took around 15 months. Remember the concept of qualifying asset, substantial period of time, borrowing cost capitalization. Suna lag raha hai? Suna lag raha hai. Is it something which is heard or is it something which is blank?
It is heard.
Heard? Very good.
But substantial period is not defined, so we are assuming that it's a substantial period because it's more than 12 months.
Yes. So it is more than 12 months. So in this case, the loan was outstanding during this period. It is also given that the loan was outstanding. It means the loan has not repaid. It was outstanding. It means for the entire period, the company has generated interest cost. Okay. So 100 crore multiply by 10%, multiply by 15, divide by 12, right? Multiply by 15, divide by 12. What is my total borrowing cost? 12.5 crore. 12.5 crore is clear to everyone. 100 multiply by 10%, multiply by 15, divide by 12. The
सर
company,
लेकिन ये 15 months का पीरियड है तो हमने 12 months की कॉस्ट क्यों ले रहे हैं हम इंटरेस्ट कॉस्ट?
मैडम वी आर डूइंग 10% इज पर एनम रेट.
हाँ जी.
तो 15 मंथ की कॉस्ट क्या होगी? सो
अच्छा.
माय 1 year कॉस्ट इज 100 multiply by 10%. What is my 12-month expense?
Yes, you are right, sir.
Okay. So my 12 month is only 10 crore, but I am taking for 15 month. So it is 12.5 crore. Okay. So the company earned 0.1 crore, 10 lakh from the short-term parking of the money borrowed pending payment to supplier and meeting all cost. So the company has borrowed 100 crores, but the company is spending 100 crore at one go. So since the company has some money in the bank account out of this 100 crores, so the company generating some interest income on that. So what is the treatment of this 10 lakh?
Reduce.
This 10 lakh is required to be reduced from the cost of the borrowing. So 12.5 minus 0.1. So your net borrowing cost, which is going to be capitalized, is 12.4 crore, right? So what should be the initial cost of the machinery? What should be the initial cost of the machinery? So initial cost of the machinery is 216.20 lakhs. Is that clear? So we have covered this measurement cost part. Yes. Clear? Clear or not clear?
Sir, clear.
Clear? Okay, so let me look at the responses on the portal. So many students have written that yes, sir, it is clear. Very good. Friends, now let's discuss the concept of deferred payment. We understood the cost part, right? Cost include purchase price, including import duties, plus non-refundable taxes, less discount and rebate, plus directly attributable cost. Okay, directly attributable cost means cost which can be avoided if the asset will not be acquired. And directly attributable costs are those costs which is necessary to bring the asset into location and condition for available for use. Okay, plus estimated decommissioning cost or site restoration cost or asset retirement cost. Okay, now what happened if the asset has been acquired on the credit terms, right? So the company has went to buy a machinery from a supplier. For example, the company has gone to Jepson. Jepson is a company which is into the manufacturing of a machinery. Okay. So the company went to Jepson and company told, I want to install a plant and I need a machinery. Jepson told, okay. So company asked, what is the price of this machinery? Jepson told that the price of the machine is 1 crore. Okay. Then the company told to Jepson that, Mr. Jepson, I don't have money right now. I will pay you after 1 year. I will pay you after 1 year. Then Jepson told, no, our credit term is maximum 1 month. So whomsoever is our customer, generally our customer are big companies, right? So we entered into a contract first, then we will sell the machinery. So my maximum credit period is 1 month, but you are asking a credit of 1 year. I told yes. Then Jepson told, okay, my price is not 1 crore. My price is 1.2 crore. My price is 1 crore 20 lakhs. Friends, why this 1 crore become 1 crore 20 lakh? Why? Because of delay in payment.
Interest.
Because of time value of money, because of interest, because this customer wants a period of 1 year. It means the company which is selling the machinery, the company has to block his funds for 1 year. Correct? And this customer will get the credit of 1 year. So it means the normal cash price is 1 crore rupees on the basis of normal credit terms, which is applicable for everyone. But the deferred payment price is 1.2 crore. So standard says that the difference between the deferred payment price and the normal cash price, the difference between these two will be considered as an interest expense. So this company which is purchasing the machinery from Jepson, whether this company will capitalize the machine at 1 crore or 1.2 crore. This company will capitalize the machine at 1 crore. So the cost of the PP is the cash price equivalent at the recognition date. So what is my cash price at the recognition date? My cash price equivalent at the recognition date is 1 crore. Okay, not 1.2 crore. But you are paying 1.2 crore, where the differential 20 lakh will go. The differential 20 lakh will go to the interest expense. What is the accounting entry? PP account debit 1 crore. Interest expenses account debit 20 lakh. To bank 1 lakh. 1 crore 20 lakh. Right? So standard says that if the payment is deferred beyond normal credit terms, the difference between the cash price equivalent and the total payment is recognized as interest over the period of credit. Okay. Until and unless such interest is capitalized. If it is a qualifying asset, in that case, that interest cost is going to be capitalized. If it is a qualifying asset. Okay. वैसी बात हो गई ना कि उसने वेंडर से लोन ले लिया, एक तरीके से लोन पे इंटरेस्ट पे कर रहे हैं, and if it is a qualifying asset, that interest is going to be capitalized. We will discuss this concept more when we discuss Ind AS 23 borrowing cost standard. Right? But to cut a long story short, if the company is paying a consideration for acquiring the PP on a deferred payment basis, in that case, the PP has to be recognized and measured in the books of accounts only at the cash price equivalent, only at the equivalent cash price. The payment over and above equivalent cash price will go to the interest expenses, right? Let's discuss illustration number 1 from ICAI study material. On 1st April 2001, an item of property is offered for sale at $10 million. At 10 million rupees, not dollar, rupees. 10 million means 1 crore. With payment terms being 3 equal installments of 33,33,333 over a 2-year period. Okay. So there are 3 installments, 33, 33, 333. The period is 2-year period. Okay. Payments are made on 1st April, 31st March and 31st March. Means the first installment has been paid on the first day when the company has acquired the machinery. The second installment has been paid after 1 year and the third installment has been paid after 2 years. Implicit interest rate of 5.36% per annum. Pass necessary journal entries for recording the property in accordance with Ind AS 16. In accordance with Ind AS 16. How do you capitalize this asset? Tell me. How do you capitalize this asset? कैसे capitalize करेंगे इस asset को? Tell me. How do you capitalize this asset?
Payments of,
right?
that would,
So first of all, let me solve this question for all of you. Important question again. Just compute the, sorry, 1st April 2002, 31st March 2003. Okay. What is my payment? Every 333 in total. So let's make it. Okay. Payment. What is my present value? Present value factor at 5.36%. Present value factor at the rate 5.36%. So what is my present value factor for the first installment? It is 1 because it is on the date of purchase itself. What is my present value? This multiplied by this. What is my PV for the second payment? For the second installment, what is my PV? Second installment के लिए क्या होगा? 1 divided by 1 plus 5.36%. 5.36%. 0.949. Okay. This is my amount. Again, the same aspect. So what is the total? The total is 94,99,895. So let's take on the round figure. Let's take 95 lakhs. Rounding off in the nearest rupee. Let's take it as a 95 lakh. So what is my cash price equivalent? My cash price equivalent is 95 lakhs. You can round off in the nearest 100. You can write down in the examination question and you can in the examination paper and you can say that I have rounded off to the near thousands. Okay. So it becomes 95 lakh. Okay. Clear? Now what is the accounting entry I need to pass? What is the accounting entry I need to pass? Journal entries. Accounting entries. Accounting entries. First entry. What is my first entry? My first entry on 1st April 2001. 1st April 2000. Date of purchase. PP account debit. PP account debit. At what value my PP will be debited? At what value my PP will be debited? At the cash price equivalent to bank account. How much money I am paying on the day one to bank account? Credit. On the day one, I am paying this first installment. I am paying the first installment on the day one. Two creditors. I need to pay to the creditors the remaining installment. Credit. What is the closing balance of creditor? This one. Sorry. This minus this. 61, 66, 667. Now I'll come to 31st March 2001. I need to bank account. Again, I need to pay the next installment to bank account credit. I have to credit my bank account by 333. But what I need to debit? I need to debit creditors. So should I debit the entire creditors? Should I debit the entire creditors? 333. Yeah.
Yes.
Interest expense is also to be debited.
So first, interest expense is also required to be debited. Interest expense is also required to be debited. Sir, what is the interest expense? Step number 2. Calculate the interest component. Step number 2. Compute the interest component. How to compute the interest component? Take all these periods, okay? Take all this period. So what is my opening balance? What is my opening balance? What is my opening balance? Opening balance. My opening balance was 95 lakh. Right? Opening balance was 90 lakh. Interest. Right? Payment. Closing balance. So in this case, I have paid an interest 0, but I have done a payment of 33, right? Payment of 33. What is my closing balance? This plus this plus this. For 31st March 2002, this will become my opening balance. What is my interest? My interest is 5.36% on this value. Yes or no? I need to pay 3,33,333. What is my closing balance? This one. On 31st March 23, this was become my opening balance. I paid an interest of 5.36%. I paid a third installment of 334. And this will be. So I just need to make an adjustment of 117. Okay. Is that clear? Whether this working is clear to all of you? Is this working clear to all of you? So what accounting entry I need to pass on 31st March 2001? Interest expense account debit. Interest expense account debit. Two creditors account credit by how much amount? Interest expense will be debited by 333,533. Creditor will be credited by this. Here, when you are paying to the creditors, creditor account debit, right, by 333. Then what happened on 31st March 2002? Same entry. Sorry, it is 3, it is 2. Same entry. Interest expense debit to creditor account. What is the value? The value is 169,466. Okay. This is the credit balance. Okay. What is the next entry? Creditors account debit to bank account. Creditors account debit to bank account. By 334. Okay. This is how what is the outcome of these entries? Your PP was debited by this much. Your interest expense is debited by 330 plus 169, which is 5 lakh. Your total payment, what is your total payment? Your total payout is how much? It is 1 crore. So this is the summary of this entire transaction. I hope this is clear to all of you. Along with calculation, along with accounting entries, along with the summary of extracts. Is that clear, friends? So friends, after discussing the measurement of cost, we have also discussed the deferred payment credit concept, right? I believe it is clear to all of you. Yes or no? Friends, any question, any doubt, any problem in understanding this concept? If not, I want to call out the session today. I want to conclude the session for the day. So since morning, we have discussed in day 16, we started with the definition of PPE. Then we started the recognition criteria of PPE. Then we discussed when we discussing the recognition criteria, we discussed the recognition criteria is same. Future economic benefits should be probable, cost can be measured reliably for initial cost as well as subsequent cost. Then we discussed in case of subsequent cost, the day-to-day or regular servicing cost will not be capitalized, will not be recognized as a PPE, but the major inspection, major overhaul, major maintenance will be capitalized as a new component of the PPE, and the old component needs to be decapitalized, derecognized, right? We also discussed that in case of spare parts, standby equipment and service equipment, it will be capitalized as a PPE if it meets the definition and recognition criteria of PPE. Otherwise, it will be classified as an inventory. Then we discussed, once you have concluded that it is a PPE, it has to be measured at cost. Cost includes purchase price plus import duty plus non-refundable taxes minus trade discount and rebates plus directly attributable cost plus decommissioning cost. If there is a advertisement cost, brand promotion cost, these administrative costs, general overheads, these are not the directly attributable cost. In case of deferred payment consideration, when the company is paying in delay, the company has deferred beyond the normal credit terms. In that case, the price which is a normal cash price and the price which the company is paying, the difference will be recognized as an interest cost. Okay, this is what we have discussed in the last 3 hours. Yes, Abrikes, over to you.
Sir, in case of that aircraft example, aircraft costing 1 crore rupees, in the year of purchase, are we supposed to break it up between inspection cost and aircraft cost? Because when we purchase, you told that it is coming after inspection, but it is required to break in that year also 15 lakhs.
Yes. So, Abrikes, normally what happened, let me tell you. Few industries are very regulated industries, right? If you see the annual report of an airline company like Indigo Airlines, in the next class, I will show you that annual report also. Okay. So what happens in these companies on the day one, when you are buying the aircraft, it is very much clear that this aircraft, first of all, this aircraft is already after all the inspection because it is dealing with the life of the people, right? When you are with, so people are flying in those aircrafts. So first of all, on the day one, it was very much clear that if you purchase this aircraft on, let's say, 8 October 2024, after 4 years, this aircraft has to go for the mandatory inspection, right? It is very much clear. So these inspection are time-based inspection. And these are not the small inspection. And these inspection will not arise only when there is a default or some problem. No, the aircraft is running perfectly fine. But still, when 4 years will complete it, this aircraft has to go to the major inspection, right? So on the day one, it was very much clear. Okay. So the life of the aircraft is 20 years. The entire body, engine, everything, it is 20 years. But this aircraft has one component which on the day one, I am aware, this component has a major cost, and this component major cost life is not 20 years. Uski life to 4 saal hi hai. Correct? So going by the matching concept and the prudence concept, standard says that if there are component and which are having a different useful life, those component needs to be depreciated over their respective useful life. So when we purchased the aircraft on the day one, we were very much clear this aircraft is inspected aircraft, and now my turn of inspection will come after 4 years. Means the current estimated cost of inspection while I'm buying a new aircraft at 1 crore rupees, I'm aware that my 15 lakh rupees is an inspection cost, which I have to pay after 4 years. Okay, which I have to pay after 4 years. So, अगर 1 crore मेरी total cost है, what is my cost of inspection? For example, my today's cost of inspection, if I will go today and get the inspection done, it will cost me 15 lakh rupees. In that case, I have to depreciate. I have to, in my fixed asset register, in aircraft line item, I have to make 2 lines. Number 1, inspection component. Number 2, aircraft, right? So inspection component, I'll capitalize at 15 lakh rupees and depreciate over a period of 4 years. Aircraft, I will capitalize at 85 lakh rupees and depreciate over a period of 20 years. This is what actually happening in the real world, in the real accounting and reporting world, not in your notebook or in examination. Okay. Real life में भी ऐसे. Okay. Correct. So मैं आपको दिखाऊंगा. So uppercase, and it will be a good example to see. Please download, and all the students, please download the annual report of Indigo Airlines, Interglobe Aviation Limited. Go to the accounting policy part. You will find it is written that the aircraft has been componentized and inspection component has been separately capitalized. वो inspection component का भी life अलग से. Sorry. Okay. No, it's okay, sir. Thank you. I will. Okay. So thank you so much, students. I hope you guys have understood the concept of this PP, whatever I've covered in the last 3 hours. And you guys have enjoyed the session thoroughly. So in the next class, we will complete and conclude this entire session on PP. So thank you so much, students. Bye-bye. Take care. Thank you so much. Yes, session is over.